Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand tomorrow. And today on the list, we're going to take a look at crude oil. Now, for those of you who haven't had a chance to realize this, today is non-farm payroll day, and it is considered to be a very aggressive day to trade. The markets can be relatively irrational, for lack of better words. They can be a little bit crazy. A lot of traders won't even trade today, or some may come in early for the European session and then not trade the US. So it's a very difficult day to trade as a whole. So if you didn't trade today, I can't say I really blame you, but if you did, we can start digging into some of these charts. So crude oil, based off of yesterday's movement, we had a nice run to the upside, and that was on the first. Then we started getting a pullback. Now, that pullback was fairly aggressive, right? It started off kind of weak and then a big slam lower, but when the sellers tried coming back down, they failed to make a new low. Now, this did take several days for this to occur, and the first of which is going to be right there. That's today. So we opened up right up here with a huge bear candle down, and that is a full brick candle. That means that there's no wick on the highs or the lows. It is one giant mass of selling. Now, when you get that type of candle, a lot of times what you're going to see is the sellers are going to jump in aggressively, right? They're going to sell the close of the candle. They're going to sell underneath it. They're going to start selling for pretty much any reason they can because they believe that the breakout is likely going to happen. Now, if you were watching some of the ETH stuff, we were more in a range. So in the room, we were talking about how this was likely going to be a failure and buyers will probably come in here too. But the overall movement is better just to wait, right? Let the sellers prove, do they actually want to take it, or are they going to fall apart? The follow through is a bull doji, right? I mean, it closed, 2 ticks away from the high of the candle. So very bad follow through. And put yourself in the shoes of the sellers. The sellers will have sold right there. And immediately, as soon as they get in a massive bear candle, they get a doji follow through. Now, that's not necessarily terrible. It could be a lot better, but it could be a lot worse too. So maybe they wait. They sit in there and they go, yeah, that's not the best, but a doji can sometimes give good continuation, like right here. So looking at that move, there's a good shot that the sellers may just continue back to the downside, but then they follow through with a big bull candle. Now things are starting to look a little worse. One bull candle, it's not even halfway back into the strong bear candle. Not a huge deal, but it is making the sellers a little bit more nervous. We get a bear candle, you can feel them wiping the sweat off their brow like, oh, finally, right? Here's the sellers. Now we can start going. And then it follows through with another bull candle. Wait a minute, right? You can see this picture being painted of something's wrong, right? The sellers have tried. They waited some more, they got a good signal, and then they failed. And then it started going back the other direction again. Now, the sellers who have entered down here, their stops will have initially been either here or here, and they're looking at this thinking, something's wrong here. This isn't quite right. We're not getting any good bear candles. Maybe we'll wait for that and then see what happens. Bad bear candle, beautiful bear candle, can't even trigger in the sellers. So obviously the sellers got a little nervous there when it turned back around bullish. As soon as it triggers above that, sellers are likely going to exit and buyers will begin entering, assuming that the sellers are going to be exiting. In that case, that is what happened. We had a nice breakout to the upside. Small little pause, maybe the sellers wanted to give it one more shot, and when that failed, that kind of put the nail in the coffin. We're likely going back to the upside. So the big breakout move now with 2 different buy opportunities and the sellers completely stuck, now we're starting to see a situation where the sellers who are stuck down here, they may try to add in to get an average position just in hopes of getting out at break even. Now the buyers, have a lot of bullish sentiment here. And when we start breaking out, we get this candle after a seller failure, these back-to-back bull candles after seller failure. It's obvious that the buyers may be looking for a bigger move. They break out above the highs of that first candle, massive bullishness, and the buyer's going to be buying into that like crazy. And as soon as it closes, it may have bad follow through in the sense of a lot of wick on the top, but it's still closed bullish, right? Look at the difference between that or this. The bears here had a doji that closed near its highs. The bulls had a bullish candle that closed near its, lows, but it still closed bullish. They followed through with an inside bull bar and then a finalized breakout to the upside. Now this breakout to the upside, lots of wick at the top, right? That's showing that there's a massive amount of sellers up there. It's probably buyers taking profit, but there's enough sellers up there to stop this move in its tracks and cause it to pull back down. Now buyers will start buying into this pullback thinking we're going to make another new high. But notice that none of these actually went underneath the prior candle's low. Then we get a huge bull candle, and it completely falls apart. Doesn't even trigger in the buyers. Again, just like we saw on the bottom side, something's wrong. That shouldn't be happening if this is going to be a continuation trend. Now, with this big of a bear breakout, buyers will likely buy into it, thinking, yeah, it might go down further, but chances are we're going to get a little bounce here first before it does, knowing that there are a lot of buyers who maybe bought inside here or are just buying down here somewhere. Either way, a small little possible scalp bounce there. But when you get this candle and it fails once again off of those highs, we're kind of sealing the deal here. Something is wrong. Sellers begin selling into it, and we drive the market back to the lows. Now, the same sentiment happened down here. We push down, we come back to that major area of support, right? This was resistance. It turned into support, and you can see as soon as they hit it, it turns into support. We get a big breakout attempt lower, and it completely fails. Bad follow-through. Today is a perfect example, the epitome of bad follow-through. And when you get that big bear breakout and bad follow-through, you're probably going to get something like this, right? The buyers come in and they go for a quick scalp in the opposite direction. So it's another buy opportunity to try to shove the market back up. So just a great example of market psychology on a very difficult day of trading. Again, a lot of traders won't trade on today, and the ones that do, they may be calling it just an early in, early out. Take one trade, win or loss, call it a day. Either way, you traded it or you didn't. Hopefully you still had a good day today, and hopefully you found this useful and maybe you learned something, and we'll see you next time.